For over a century, one bank has been at the center of wars, scandals, secret deals, and global power struggles. From laundering Nazi gold to hiding billions to the world's elite, from billion-dollar losses to government bailouts, UBS has survived everything. But how did this Swiss giant rise from secrecy to become the largest wealth manager on earth? And why does its story matter to us all? UBS, the bank that cheated the world. In the world of finance, some names carry a shadow darker than others. And among those names, one stands taller, or perhaps more sinister than the rest, UBS. Today, UBS is known as the largest wealth manager on earth. Trillions of dollars flow through its vaults, its digital systems, and its discreet private rooms where the global elite whisper their fortunes into existence. But behind this towering image of strength lies a story of corruption, deception, survival, and reinvention. A story that stretches from the bloody battlefields of World War II, through the smoke-filled boardrooms of Swiss financiers, all the way to the heart of Wall Street and the collapse of the 2008 financial system. This is not merely a story of banking. It is a story of power, secrecy, and betrayal. The first scandal, UBS and Washington's wrath. The year was 2009. The United States Justice Department made an announcement that shook the financial world. UBS, Switzerland's proudest banking giant, had been caught aiding in the largest offshore tax evasion scheme in history. Federal prosecutors revealed that more than 150 wealthy Americans had used the bank to hide assets, dodge taxes, and exploit Swiss secrecy laws. For decades, UBS had marketed silence as a service, a luxury product in itself. Privacy was not just a feature. It was the foundation of their empire. Oligarchs, CEOs, celebrities, dictators, and criminals all had found shelter in UBS's discreet vaults. But as Washington's pressure mounted, Switzerland faced a painful choice. Would it defend its centuries-old tradition of neutrality and secrecy, or bow to the wrath of the world's most powerful government? In the end, UBS caved. It agreed to hand over the names of more than 4,500 American account holders. For the first time in history, the iron wall of Swiss banking secrecy cracked open. For many, it was just another financial scandal. But in reality, this was a reckoning, the end of an era, the origins of Swiss banking secrecy. To understand why this mattered so much, we must go back more than a century. Long before UBS became a global behemoth, Switzerland had cultivated a reputation unlike any other. Nestled between powerful empires, this small nation carved out its identity through neutrality. Wars raged across Europe, but Switzerland stood apart, untouched, its borders intact, its culture calm, its mountains eternal. But neutrality wasn't just political, it was financial. As early as the 1800s, Swiss banks began to attract the wealth of kings, aristocrats, and merchants who feared revolution, invasion, or political collapse. The discreet nature of the Swiss people, combined with strict banking secrecy laws, made the country a vault for the powerful. By the early 20th century, secrecy was no longer just a byproduct, it was a business model. Numbered accounts, anonymous deposits, and hidden vaults transformed Switzerland into Europe's most secure safe house. And when World War II erupted, that reputation would be tested like never before. World War II, UBS and Nazi gold. September 1939. Hitler invades Poland. Europe descends into chaos. Nations collapse within weeks. Cities are reduced to ashes, and millions flee for their lives. Switzerland, surrounded by Axis powers, declares neutrality once again. But neutrality is not safety. It is risk. As armies burn and borders fall, Switzerland becomes more than just a refuge for people. It becomes a refuge for money. Aristocrats, industrialists, and persecuted minorities rush to protect their wealth in Swiss vaults. Gold, cash, and bearer bonds flood into the country. But not all deposits come from victims. Some come from the very regime causing the suffering. By the early 1940s, one Swiss bank had risen above the rest. UBS, the Union Bank of Switzerland. Founded in the 1860s as a local custodian, UBS had grown steadily through mergers and acquisitions. Now, in wartime, it was uniquely positioned to profit from secrecy. And profit it did. Documents later revealed that UBS not only handled Jewish assets, but also processed gold stolen by Nazi Germany. looted from occupied nations, from central banks, and even from concentration camp victims. This gold was melted down, stamped with neutral markings, and reintroduced into circulation. Between 1939 and 1945, Switzerland's central bank purchased more than $400 million worth of gold from Nazi Germany, nearly one-third of all Reichsbank gold sales. UBS was a key player in laundering this wealth. The irony was grotesque. While some Jewish families had their savings in Swiss accounts hoping to survive, their stolen jewelry and wedding rings were being processed by the very same banks. When the war ended, Europe lay in ruins. Millions were dead, cities destroyed. But Switzerland emerged almost untouched, its money stable, its banks richer than ever. And UBS, it was poised to dominate. UBS had learned the hard way that in the volatile world of finance, survival depends not only on numbers but on trust, perception, and the ability to adapt faster than rivals. The takeover of Credit Suisse in 2023 was proof of this adaptability. For decades, Credit Suisse had stood as a proud competitor, a symbol of Swiss financial prestige. But years of scandals, mismanagement, and mounting losses had weakened its foundations until just one spark, the collapse of Silicon Valley Bank, was enough to send shockwaves through its balance sheet. The Swiss government and regulators acted quickly, but they knew there was only one possible savior: UBS. The deal was controversial. Many Swiss citizens felt uneasy about one bank becoming so powerful, so dominant, that its failure could drag the entire nation into collapse. But in the eyes of regulators, the alternative was far worse, allowing Credit Suisse to go bankrupt, triggering contagion across Europe and beyond. For UBS, this wasn't just a rescue. It was an opportunity to reassert itself as the undisputed king of global wealth management. Credit Suisse's assets, its private banking network, and its client base were now under UBS's control. The irony wasn't lost on anyone. Back in the 1990s, Credit Suisse had been the aggressor, stronger, bolder, chasing opportunities that UBS had hesitated to seize. Now the tables had turned completely. But with great size comes even greater risk. UBS suddenly found itself not just the largest bank in Switzerland, but one of the largest in the world. It carried the weight of billions in questionable assets inherited from Credit Suisse, as well as the enormous challenge of integrating two different corporate cultures, one cautious and rehabilitated under Armadi's leadership, the other scarred by years of scandals and reckless bets. Inside the newly merged UBS, the atmosphere was tense. Employees of Credit Suisse worried about their futures. Thousands faced layoffs as overlapping departments were trimmed. Others feared that UBS would dismantle their legacy completely, erasing the identity of a bank that had once been a global giant in its own right. Meanwhile, UBS veterans braced themselves for the enormous task of absorbing such a massive institution without losing focus on their own strategies. At the helm, Sergio Armadi returned as CEO with a clear mission: to stabilize UBS and ensure that Credit Suisse's collapse did not become UBS's downfall. He knew the world was watching. Politicians, regulators, investors, and clients all were waiting to see whether UBS could digest his rival without choking. The challenge was monumental, but Armadi approached it with the same discipline and calm determination that had helped him rebuild UBS after the 2008 crisis. The world of finance, however, does not wait patiently. Global markets were still fragile in the wake of multiple banking collapses. Rising interest rates, inflationary pressures, and geopolitical tensions between the United States and China added to the uncertainty. UBS, now bigger than ever, had to prove that it could not only survive in this environment but thrive. The takeover of Credit Suisse also reignited old debates about banking secrecy, morality, and the role of Swiss banks in the global economy. For more than a century, Switzerland had built its reputation as a volatile world, a place where the wealthy could stash their fortunes without interference. But after decades of scandals, from Nazi gold to offshore tax evasion, the image of Swiss banking had changed. No longer untouchable, banks like UBS were now subject to intense scrutiny. Still, for many of the world's elites, UBS remained the safest choice. Billionaires, royal families, and multinational corporations continued to entrust their fortunes to the bank. With its global presence and massive scale, UBS offered something few others could: stability in an increasingly unstable world. Yet the question lingered, how long could that stability last? History had shown that UBS was no stranger to scandal, risk, and crisis. From laundering Nazi gold to evading U.S. taxes, from rogue traders to LIBOR manipulation, the bank had weathered storm after storm. Each time, it emerged battered but alive, adapting just enough to survive. Now, with Credit Suisse under its wing, UBS faced its biggest test yet. Would it become the symbol of resilience in global finance? Or would it collapse under its own weight? Proving once again that in the world of banking, no institution is ever truly too big to fail. In the years following the Credit Suisse takeover, UBS's influence began to stretch far beyond Switzerland. No longer just a European powerhouse, the bank was now deeply embedded in the financial arteries of the world. Its wealth management arm oversaw the fortunes of billionaires across Asia. Its investment bank facilitated deals in America, and its global reach meant that UBS was as much a geopolitical player as it was a financial one. In the Middle East, sovereign wealth funds from countries like Saudi Arabia, Qatar, and the United Arab Emirates funneled billions into UBS accounts. These funds, built on oil revenues, were looking for safe havens and sophisticated strategies to diversify away from fossil fuels. UBS, with its reputation for discretion and its vast network of advisors, became the trusted custodian of petrodollar wealth. In Asia, UBS expanded its grip on China's booming market of high-net-worth individuals. The rise of Chinese billionaires created an entirely new class of clients eager to move money abroad, hedge against political uncertainty, and secure assets beyond the reach of Beijing's tightening grip. UBS positioned itself perfectly, offering not just financial services, but also access to global markets and elite investment opportunities. In the United States, UBS walked a delicate line. On one hand, it sought to rebuild trust after the tax evasion scandals that had tarnished its reputation. On the other, it couldn't afford to step back from the world's most important financial market. The Payne-Weber acquisition, made years earlier, continued to pay off, giving UBS a strong foothold in American wealth management. But the shadow of U.S. regulators still loomed large. Washington had made it clear. Secrecy had limits, and even the largest Swiss bank would be held accountable. This global reach came at a cost. UBS was now woven into the fabric of international politics. When the U.S. imposed sanctions on Russia following the invasion of Ukraine, UBS had to carefully navigate the frozen assets of Russian oligarchs. Billions were locked up, and UBS became the gatekeeper between Moscow's elite and their frozen fortunes. Similarly, when sanctions targeted Iran or Venezuela, UBS had to comply, even as it risked alienating powerful clients in the process. The bank's power was undeniable. In some ways, UBS had become larger than the Swiss state itself. Its assets dwarfed Switzerland's economy. Its influence reached across continents, and its collapse could trigger crises far beyond Zurich. This reality led some question whether UBS was truly a private institution anymore, or whether it had become, by necessity, an arm of the Swiss state, a tool of global finance that had to be protected at all costs. But history had shown that even the strongest banks carry vulnerabilities hidden beneath the surface. UBS's past was filled with examples of how ambition, greed, and poor oversight could spiral into disaster. The LIBOR scandal, the mortgage-backed securities collapse, the offshore secrecy schemes, all serve as reminders that no matter how powerful, a bank's reputation could crumble in a single moment. And UBS's newfound dominance after swallowing Credit Suisse came with dangers of its own. Integrating two vast financial empires wasn't just about spreadsheets and balance sheets. It was about people, culture, and trust. Former Credit Suisse employees carried scars of betrayal, while UBS staff feared being dragged into the same mistakes that had destroyed their rival. Tension simmered behind closed doors, and Ermati knew it would take years, not months, to forge a true unity between the two legacies. Meanwhile, the global financial landscape was shifting. Digital currencies, blockchain technology, and decentralized finance began to challenge the very foundations of traditional banking. While UBS publicly dismissed Bitcoin in its early years, by the 2020s it was forced to adapt, offering crypto-related investment products to clients who demanded exposure to the new asset class. It was a reluctant embrace, but a necessary one. If UBS failed to innovate, it risked becoming obsolete in a world where wealth was no longer measured only in gold, bonds, and stocks, but also in digital tokens and blockchain assets. Yet, even as new technologies rose, the essence of UBS remained the same. It was a custodian of the world's wealthiest individuals, the vault of the global elite. From royal families in the Middle East to tech billionaires in Silicon Valley, from industrial magnates in Europe to political elites in Asia, UBS held the keys to fortunes that could sway economies and even governments. But therein lay the greatest irony. The same secrecy and concentration of wealth that had fueled UBS's rise also made it vulnerable. For centuries, secrecy was Switzerland's shield. Now, in a world demanding transparency, accountability, and fairness, secrecy was also a target. Regulators, journalists, and activists pressed harder than ever, digging into hidden accounts, shell companies, and offshore structures. And each revelation risked exposing UBS to yet another reckoning. For UBS, the future carried as much danger as opportunity. The rise of AI-driven finance was already reshaping global markets. Algorithms can now analyze millions of data points in seconds, executing trades with lightning precision, predicting risks, and even tailoring wealth strategies to individual clients. For a bank built on trust, personal relationships, and discretion, UBS faced a difficult choice: embrace automation and risk eroding its aura of exclusivity, or resist technological change and risk being outpaced by competitors. Behind the scenes, UBS began pouring resources into artificial intelligence, machine learning, and digital wealth management platforms. Robo-advisors and algorithmic trading units became central to its operations. The irony was clear. The same bank that once sold secrecy and human discretion was now forced to embrace transparency and machine logic. Yet even as the machines grew smarter, the wealthiest clients still demanded something algorithms could not give them: human judgment, cultural sensitivity, and above all, silence. At the same time, a new pressure was mounting on the horizon: climate change. The global banking system was increasingly under scrutiny for how it handled environmental responsibility. UBS, as the world's largest wealth manager, found itself in the crossfire. On one side, activists accused the bank of financing industries that fueled environmental destruction: oil, coal, deforestation. On the other, wealthy clients demanded strong returns, often tied to those very industries. The contradictions were impossible to ignore. In response, UBS branded itself as a pioneer of sustainable finance, pledging billions into green investments, renewable energy projects, and ESG funds. The message was clear. UBS wanted to be seen as the bank of the future, not the past. But critics argued that these moves were more marketing than morality, a thin layer of green paint over a system still addicted to fossil fuel wealth. This duality defined UBS's identity in the modern era. To the public, it was a global leader in sustainability, innovation, and responsible investing. But in the shadows, it remained what it had always been: the custodian of power, the fortress of the elite, the vault where wealth was shielded from the storms of politics, taxes, and law. Yet perhaps the greatest risk to UBS wasn't climate change, or AI, or regulation. It was the very principle that had made it powerful in the first place: its size. After absorbing Credit Suisse, UBS had become so vast that some economists began calling it a megabank, a financial colossus whose collapse could shatter entire economies. If UBS were ever to fail, the shockwaves would ripple far beyond Switzerland, devastating markets from New York to Hong Kong, from London to Dubai. This is the paradox of too big to fail. On one hand, it grants UBS protection. Governments would never allow its downfall because the consequences would be catastrophic. On the other hand, it places the bank in a dangerous spotlight. Every risk it takes, every scandal it faces, every misstep it makes is magnified, because the stakes are no longer just about shareholders. They are about nations, societies, and the global order itself. For ordinary people, UBS may seem like a distant giant, irrelevant to daily life. But in truth, it touches everyone. When UBS moves billions in oil money, the price of energy shifts. When UBS hedges against inflation, global currencies feel the tremor. When UBS invests in tech, startups rise or fall. When UBS locks the fortunes of oligarchs, sanctions gain or lose their teeth. The hand of the bank stretches invisibly across the world. And that is the chilling reality of UBS's legacy. A story that began with secrecy in the Alps, that survived wars, scandals, and crashes, that consumed its rivals, and that today stands as both a monument to human ambition and a warning of human greed. Because if history has shown anything, it is that even the strongest empires, whether nations or banks, are never invincible. They rise, they dominate, and eventually they fall. The question is not if UBS will face another reckoning. The question is only when. For UBS, the weight of history is always present. Every scandal, every bailout, every whispered deal in shadowy boardrooms serves as a reminder that power comes at a cost. The world has changed, but the fundamental dynamics remain the same. Money seeks shelter, and UBS continues to provide it. Yet as the bank grows ever larger, so too does the scrutiny. Regulators in the United States, Europe, and Asia are no longer content to let secrecy dominate. Cross-border transparency agreements, automatic tax information exchanges, and tougher anti-money laundering frameworks chip away at the walls that UBS once used to defend its empire. Still, there's a reason the world's elite continue to flock to UBS. The bank has mastered something deeper than finance. It has mastered narrative. To clients, UBS is not just a place to park wealth. It is a symbol of endurance, a vessel that has outlived empires, wars, and crises. By associating with UBS, the wealthy believe they are buying into stability itself. But history shows that stability is an illusion. One need only look back to 2008 to see how quickly illusions collapse. In a matter of weeks, what seemed like unshakable financial giants turned to rubble, leaving governments scrambling to hold the system together. UBS barely survived that storm. If another such crisis were to erupt, whether from over-leveraged markets, geopolitical conflict, or cyber warfare, the question is whether even UBS's size could guarantee its safety. Cybersecurity, in particular, is a modern battlefield that UBS cannot ignore. Where once vaults and steel bars protected wealth, today it is lines of code, firewalls, and encryption keys. A successful breach into UBS's systems would not only endanger trillions in assets, but could shatter the psychological trust that holds the bank together. For a financial institution, trust is oxygen. Without it, collapse is inevitable. And yet, in the corridors of Zurich, London, New York, and Singapore, UBS executives remain confident. Their strategy is clear: to expand wealth management, consolidate global influence, and ensure that no matter what storms arise, UBS remains not just a bank, but the bank. But therein lies the danger. History has taught us that the moment an institution believes itself untouchable is the very moment its downfall begins. For now, UBS stands tall, its vaults full, its balance sheet strong, its reach extending from Wall Street to the Gulf, from Hong Kong to the heart of Europe. But beneath that strength lies fragility. The fragility of size, the fragility of trust, the fragility of a system where wealth is concentrated in the hands of few, guarded by an institution too powerful for any nation to control. And as the story of UBS continues into the future, one truth becomes undeniable. When a single bank holds so much power, its fate and the fate of the world are no longer separate. They are one. The rise of central bank digital currencies, or CBDCs, represents one of the greatest challenges UBS has ever faced. For centuries, private banks like UBS thrive by being the middlemen of secrecy, custody, and discretion. But now, governments themselves are creating direct digital systems where citizens could, in theory, hold accounts straight with central banks. If adopted at scale, CBDCs could undermine UBS's role as the trusted custodian for the ultra-wealthy. Why pay fees to a private bank when a digital ledger, guaranteed by a government, promises security and transparency? For UBS, the threat is existential. And yet, history shows UBS has never been passive in the face of change. Instead of resisting, the bank is already adapting. By investing in fintech, blockchain research, and digital asset custody, UBS is signaling to its elite clients, even in the digital age, we will still be your safest vault. Whether it is Bitcoin, Ethereum, or tokenized real estate, UBS is positioning itself not as a victim of innovation, but as its gatekeeper. But innovation comes with new enemies. Governments may tolerate UBS when it protects wealth in gold, bonds, or cash. But when it becomes a gatekeeper, digital assets that could bypass regulation, capital controls, and even sanctions, the political pressure could intensify. Already, watchdogs in Washington and Brussels are circling, determined to prevent UBS from becoming the shadow infrastructure of the digital financial system. For UBS, this tension is nothing new. For over 150 years, the bank has lived in this dangerous space. Too useful to destroy, too powerful to ignore. Its history is built on contradictions, neutrality and complicity, trust and scandal, survival and betrayal. Each chapter shows the same pattern. Just when the world believes UBS has fallen, it rises again, stronger than before. But this cycle cannot go on forever. Every empire has its breaking point. For UBS, the cracks could come from many places. Another financial crash, a cyber war targeting global banks, the collapse of faith in the dollar, or even a political movement demanding the breakup of institutions deemed too big to fail. And yet, when asked, UBS executives project calm. To them, crises are not dangers, they're opportunities. A failing rival? UBS can swallow it. A changing market? UBS can adapt. A scandal? UBS can pay, survive, and outlast. That belief, almost arrogant in its confidence, is what keeps UBS alive. But it is also what makes the story of UBS so dangerous. Because when an institution becomes so large, so vital, and so deeply entrenched in the global economy, its survival is no longer just about its own clients. It is about all of us. Today, UBS is not merely a bank. It is a pillar of the global financial order. Its collapse would not simply hurt investors. It would shake the foundations of economies, governments, and societies. The story of UBS is not just a story of one bank, but how wealth and power intertwine, shaping the world in shadows most never see. And that story is still being written. As UBS steps deeper into the 21st century, the question isn't just whether it will survive, but what role it will play in the next great transformation of global finance. Already, cracks are forming in the foundation of the system UBS has relied on for decades. For one, the petrodollar order, the backbone of global finance since the 1970s, is under pressure. For years, oil sales denominated in U.S. dollars created a constant flow of capital back into American banks and assets, reinforcing Wall Street's dominance. UBS, like other European giants, rode the wave of dollar supremacy to expand its international wealth management empire. But now, countries like China, Russia, and even Saudi Arabia are experimenting with selling oil in yuan or other currencies. If the dollar loses its primacy, the entire hierarchy of banking could shift. UBS, tied so deeply to Western markets, will be forced to adapt at lightning speed, finding ways to remain relevant in a multipolar financial world. At the same time, climate change finance is emerging as a new battlefield. Trillions will need to be mobilized for green energy, infrastructure, and carbon reduction projects. UBS sees opportunity here, not just in lending, but in controlling the gateways of investment. For wealthy clients who want to profit while appearing socially responsible, UBS can position itself as the manager of vast green portfolios. Yet behind the public image of sustainability lies another truth. Whoever controls the flow of green capital will also control the industries of the future. Meanwhile, another threat lurks: artificial intelligence. AI is not just reshaping industries like healthcare or logistics. It is rewriting the rules of finance itself. Algorithmic trading, AI-powered wealth allocation, and even autonomous robo-advisors are replacing traditional bankers. For UBS, this is both a danger and an opportunity. A bank that once prided itself on human discretion is now racing to master machines that never sleep, never hesitate, and can analyze entire markets in milliseconds. If UBS adapts, it could dominate an AI-driven world of finance. If it hesitates, smaller, faster, tech-native firms could eclipse it. But beyond technology, geopolitics may once again test UBS's survival. In Washington, regulators view the Swiss bank not just as a financial institution, but as a strategic risk. The memory of 2008 still lingers, when one bank's failure nearly toppled entire nations. To some policymakers, UBS is no longer too big to fail. It is too dangerous to exist. Calls for tighter scrutiny, higher capital requirements, or even breakups of global megabanks are growing louder. On the other side of the world, Beijing sees UBS differently, not as a risk, but as a tool. China's elite, long accustomed to hiding wealth offshore, are increasingly turning to discreet channels in Hong Kong, Singapore, and Zurich. UBS finds itself balancing between Western regulators who demand transparency and Eastern clients who demand secrecy. That balance is not sustainable forever. At some point, UBS will have to choose. And yet, if history tells us anything, it is that UBS will not simply collapse under pressure. Each time it has been cornered by war, scandal, or crisis, it has emerged transformed. Neutral banker of Europe, custodian of Nazi gold, wealth manager of the Cold War rich, global superbank of the 2000s, savior of Credit Suisse in the 2020s. Each chapter adds another layer to its mythology, but myths can be dangerous. They breed the illusion that survival is inevitable, that size guarantees safety. In truth, the larger UBS becomes, the more fragile it really is. A cyber attack on its digital vaults, a coordinated run on offshore accounts, or even a new law banning secrecy across jurisdictions could topple the bank faster than any financial model predicts. For now, UBS stands triumphant, more powerful than ever, larger than any rival in Switzerland's history, managing trillions to the world's elite. But deep down, its leaders know the truth. In finance, stability is an illusion. The same forces that made UBS untouchable could, in an instant, make it vulnerable. The question that remains is not whether UBS can survive the next crisis. The question is, when that storm comes, will UBS once again bend history to its will, or will history finally break it? As the 2020s roll forward, UBS finds itself at the center of a new battleground of money. The old world of paper accounts, discreet private bankers, and golden vaults is giving way to a digital realm where the very definition of wealth is changing. Enter the era of digital currencies. Central banks from Washington to Beijing are testing their own forms of digital money, central bank digital currencies, or CBDCs. To governments, these are powerful tools. Every transaction can be tracked, every payment monitored, every account frozen with a keystroke. For UBS, whose empire was built on discretion and secrecy, CBDCs are a paradox. On the one hand, they threaten to strip away the privacy that once made Swiss banking irresistible. On the other hand, they open doors. UBS could become the trusted intermediary for elites who want to navigate this new landscape, moving seamlessly between public, state-controlled digital money and private, shadowy wealth havens. But history is repeating itself in new forms. Just as UBS once laundered Nazi gold under neutral markings, today it faces pressure to handle digital assets of questionable origin. Cryptocurrencies, offshore tokens, and anonymous blockchain transactions flow through a global system hungry for loopholes. Some regulators accuse banks of fueling crime in cyberspace. Others quietly rely on them to keep the system stable. For UBS, it is the same dilemma of the 1940s, reborn in code rather than gold. And yet there's more. As wealth inequality soars to levels unseen in modern history, resentment grows. In Zurich and Geneva, UBS towers gleam against the Alps, symbols of wealth and endurance. But across Europe and America, protesters march against the 1%, calling for wealth taxes, transparency laws, and the dismantling of offshore secrecy. UBS, long the custodian of dynasties, is once again cast as the villain in a global morality play. The irony is sharp. For over a century, Swiss bankers thrived on being invisible. Now, they are unavoidably visible, targets of outrage, scrutiny, and anger. Still, inside the bank, the mood is different. Executives believe they are not villains, but stewards of stability. To them, UBS does what governments cannot. It protects wealth across borders, across regimes, across wars. When empires fall, currencies collapse, or revolutions erupt, UBS is there, silent, steady, holding the line for those who can afford it. In their minds, they are not just bankers. They are guardians of continuity in a world that never stops burning. But continuity comes at a cost. Each decade, UBS grows larger, more complex, more entangled with the fate of nations. With Credit Suisse absorbed, UBS alone now represents almost the entire backbone of Swiss finance. This makes it too big to rescue. The next failure cannot be patched with a bailout, because there is no rival left to absorb it. Switzerland itself might not be large enough to save the monster it has created. That raises a haunting question. What happens if UBS fails? The answer is chilling. A collapse would not just shake Switzerland. It would reverberate through Asia, the Middle East, Europe, and America. Sovereign wealth funds, billionaires, pension systems, even small family fortunes, all will be touched. UBS is not just a bank anymore. It is a nexus of global power. And as history has shown, the higher the tower, the greater the fall. Yet, even as UBS cements its grip on global wealth, new storms are brewing. The 2020s are not just an era of digital money and rising inequality. They're also the decade of climate change, pandemics, and geopolitical upheaval. And UBS, with trillions under management, is forced into a role it never openly sought. Financier of the future. As wildfires consume Europe, floods displace millions in Asia, and droughts hammer Africa, activists demand that banks stop funding fossil fuels. UBS, with its vast investment arms, faces relentless pressure. Divest from oil, invest in renewables, and redirect capital into green finance. Publicly, UBS pledges billions for sustainability projects. Behind the scenes, however, the dilemma is brutal. Oil-rich sovereign funds in the Middle East remain some of UBS's most important clients. Walking away from them risks losing not just profits, but entire governments. Once again, UBS must dance between moral scrutiny and financial survival. Meanwhile, geopolitics grows darker. The rivalry between the United States and China escalates into open economic warfare. Sanctions fly across borders like missiles, cutting off companies, freezing accounts, and reshaping supply chains. In this shadow war, UBS plays a dangerous double game. On one side, it must comply with Washington's sanctions regime. On the other, it cannot afford to lose the tidal wave of Chinese wealth flowing into Switzerland. To Beijing's rising elite, UBS is more than a bank. It is an escape hatch, a way to shield fortunes from domestic crackdowns. This tightrope act is not new. It echoes the 1940s, when UBS took gold from Hitler while still trading with the Allies. It echoes the 1990s, when UBS shielded dictators' accounts even as it proclaimed global transparency. The past is never past in banking. It only reappears in new disguises. But what truly terrifies regulators isn't oil or China or even secrecy. It's technology. Artificial intelligence is now analyzing global trades in real time, exposing money trails that once stayed hidden for decades. Shell companies hidden in trusts, numbered accounts. AI begins to pierce them all. Governments are already deploying machine learning to hunt down tax evasion and illicit flows. For UBS, the walls are closing in. Its old business model, based on invisibility, faces extinction. And yet, paradoxically, AI may also be UBS's salvation. Inside Zurich's glass towers, UBS executives pour billions into their own AI systems. Tools that promise to manage wealth faster, predict crises earlier, and serve clients better than any human banker. The irony is stark. The same technology that threatens to expose the bank could also be the very thing that keeps it alive. Still, the shadows never vanish. In hushed corridors, whispers spread of UBS's involvement in cyber finance. Quiet partnerships with blockchain firms, discreet handling of state-backed crypto, and hidden vaults not of gold, but of encrypted digital tokens. If true, it would mean UBS is reinventing itself for the 21st century, not as a custodian of cash, but as the master of digital wealth itself. But the bigger question lingers like a storm cloud. How long can this last? For over a century, UBS has survived wars, scandals, lawsuits, and bailouts. It has bent to power, evaded scrutiny, and reinvented itself time and again. But each resurrection leaves scars, and each scandal weakens a myth of invulnerability. In the end, UBS may not be judged by the fortunes it safeguarded or the empires it served, but by the cost of its survival. Because survival for a bank this large is never free. Someone always pays the price. whether it's the public, the taxpayers, or the voiceless victims whose wealth was stolen and laundered through secret vaults. UBS stands today as the largest wealth manager on earth. Too big to fail, too big to ignore, and perhaps too big to save. Its story is not just about money. It is about the very fabric of global power. And if history has taught us anything, it is this. No empire, no matter how rich, no matter how secret, no matter how untouchable, lasts forever. By the mid-2020s, UBS is not only the guardian of fortunes, it is a pillar of governments. When nations need to raise capital, restructure debts, or stabilize currencies, they call UBS. Quietly, discreetly, the bank advises presidents, monarchs, and ministers. It is no longer just a bank. It is a shadow state, a financial power with influence that rivals entire nations. But with power comes risk. The U.S. Justice Department still remembers UBS's role in offshore tax evasion. European regulators still recall the LIBOR scandal, and activists still demand reparations for the bank's Nazi-era profiteering. Old sins do not die. They resurface, generation after generation, dragging UBS into new storms. And now, a new battlefield emerges: cybersecurity. In a world where money flows as data, a single breach can be catastrophic. Hackers, state-sponsored or freelance, circle UBS like wolves. Rumors spread of attempted intrusions by Russian cyber units, North Korean operatives, and sophisticated criminal syndicates. UBS invests billions in digital defenses, building cyber fortresses around its systems. Yet, insiders admit the bank is only as strong as its weakest link. One successful attack could expose trillions. At the same time, UBS faces another invisible enemy: reputation. In an age of social media, trust can collapse in hours. A leaked document, a whistleblower's testimony, even a viral tweet can spark a bank run. And unlike in the 20th century, when secrecy was a shield, today transparency is demanded. UBS must walk a knife's edge. Reveal too much, and its old clients flee. Reveal too little, and governments tighten the noose. Still, the flow of wealth never stops. Billionaires in Shanghai, Riyadh, Sao Paulo, and Silicon Valley continue to move fortunes into UBS accounts. For the elite, UBS is more than safety. It is insurance against chaos. Political collapse, civil war, economic sanctions. Whatever the storm, UBS has weathered worse. But in private, UBS executives admit a truth they rarely say aloud. The bank is not indestructible. The global financial system is more fragile than ever. The rise of decentralized finance, crypto markets, and shadow banking networks poses existential threats. If enough elites bypass UBS in favor of blockchain custody or sovereign digital currencies, the bank's dominance could evaporate overnight. And so, UBS begins to adapt once again. The bank quietly develops its own digital asset division, experimenting with custody of tokenized securities, central bank digital currencies, and even discrete crypto wealth services for the ultra-rich. Publicly, it is cautious, speaking of compliance and regulation. Privately, it prepares for a future where money is no longer paper or even numbers in an account, but strings of encrypted code on a decentralized ledger. For over 150 years, UBS has lived by a single law: survive. It survived Hitler, survived Wall Street, survived bailout scandals and shame. But survival always comes at a price. Nations may change. Empires may fall. Yet UBS remains, scarred but standing, carrying with it the secrets of kings, dictators, CEOs, and criminals. And as the 21st century moves forward, one question lingers unanswered. Will UBS continue to shape the world's future, or will it finally be destroyed by its past? That question, whether UBS will continue to shape the world's future or be destroyed by its past, has haunted regulators, investors, and historians alike. Because UBS is not just a bank. It is a vault of history, a living archive of the world's most sensitive secrets. Inside its servers and old paper archives are details that could destabilize governments, ruin families, and expose networks of corruption stretching across continents. Think about it. Every dictator who ever feared being overthrown, every billionaire who ever wanted to hide from taxes, every multinational corporation looking to shield profits from regulators, Many of them passed through UBS's doors. What happens if those secrets ever come out? The truth is, UBS survives not only because it is too big to fail, but because it is too dangerous to destroy. Shutting it down would unleash a wave of revelations capable of shaking the very foundations of global power. And so, politicians, regulators, and rival banks tread carefully. UBS may be disciplined with fines, forced into settlements, even humiliated publicly, but never truly dismantled. Meanwhile, UBS continues to expand. In Asia, it becomes a bank of choice for Chinese tycoons seeking to move wealth abroad amid Beijing's tightening grip. In the Middle East, it attracts oil wealth and royal family fortunes, becoming a quiet partner in regional politics. In the United States, despite its scandals, it grows even deeper roots in wealth management, advising Silicon Valley entrepreneurs and Wall Street power players alike. Yet, as the bank grows larger, the world around it grows more unstable. Climate change is reshaping economies, sparking new migrations of capital. Rising populism is turning governments against the very elites who make up UBS's clientele. And new technologies, cryptocurrencies, decentralized finance, AI-driven trading, threaten to erode the old pillars of centralized banking. Inside UBS, executives know this. Their strategy meetings no longer talk about profits alone. They talk about survival in a fractured world. How do you secure clients' assets when entire currencies may collapse? How do you promise stability when climate disasters erase billions in infrastructure overnight? How do you maintain secrecy when every government is demanding transparency in the name of security? The answers are not clear. But UBS does what it's always done. It adapts, shifts, reinvents. Like a chameleon, it changes color to match the era. In the 1940s, it was a banker for Nazis and refugees alike. In the 1980s, it was a king of gold. In the 1990s, it was a merger-hungry empire. In the 2000s, it was a Wall Street imitator. Today, it calls itself the guardian of global wealth. But beneath every reinvention lies the same question. Can a bank so deeply tied to secrecy, power, and shadow dealings ever truly be trusted? And if not, what happens when the next storm comes? The next storm may already be on the horizon. Around the world, governments are preparing for a new financial battlefield: digital currencies. China is pushing forward with its digital yuan, hoping to challenge the dominance of the US dollar. Central banks in Europe and America are experimenting with digital currencies of their own. For UBS, this is both an opportunity and a threat. On one hand, digital currencies could allow UBS to manage wealth in new ways. Faster transfers, more transparency for regulators, and an expanded client base among younger tech-driven elites. On the other hand, if governments gain too much control over digital money, UBS's most valuable asset, discretion, could vanish forever. In a world where every transaction is traceable, the old Swiss promise of secrecy dies completely. But UBS has never been just about money. It has always been about power. In private conversations, UBS executives describe themselves not as bankers, but as custodians of global influence. Their clients aren't just rich. They are the ones who shape nations, fund wars, control corporations, and bend policies in their favor. To protect that kind of power, UBS must constantly walk a razor's edge, cooperating enough with regulators to survive, but resisting enough to keep its secrets intact. And then there's geopolitics. As China tensions rise, UBS once again finds itself caught in the middle. Washington pressures Swiss banks to tighten compliance and expose suspicious capital flows. Beijing, meanwhile, expects loyalty from the banks that handle Chinese wealth offshore. UBS cannot anger either side, yet it cannot fully satisfy both. The bank's global empire rests on this balancing act, the same way it once rested on neutrality in World War II. Still, for now, UBS stands taller than ever. Its takeover of Credit Suisse gave it unprecedented reach, swallowing its last major rival and making UBS the undisputed king of European banking. It manages trillions of dollars, more than the GDP of most nations. It employs tens of thousands of people across the globe. It is not just a bank. It is an empire without borders. But history whispers a warning. Empires fall not because of one blow, but because of cracks ignored for too long. UBS knows this. It knows that somewhere within its vast machinery, an overlooked trade, a hidden client, an underestimated risk, the seeds of the next disaster may already be growing. The question is not if the next crisis will come. The question is whether UBS, once again, will survive it. The world of finance has always been shaped by cycles of rise and fall, and UBS knows this truth better than anyone. Its history is a living archive of survival. Neutrality during world wars, expansion during the Cold War, near death during the financial crisis, and resurrection in the age of global banking consolidation. Yet, every survival has come at a cost. Every victory has carved scars deep into its culture, scars that cannot be erased. Inside UBS, employees often whisper a phrase, "We are too big to fail, but never too strong to fall." It is both a warning and a reminder. For UBS, failure doesn't come only from external shocks. Often, it comes from within, ambition unchecked, secrecy abused, greed disguised as innovation. The same forces that make UBS powerful are the ones that threaten to destroy it. Consider its relationship with governments. For decades, UBS mastered the art of subtle defiance, protecting clients while appeasing regulators just enough to survive. But in today's world, governments are stronger, more aggressive, and armed with technology that can pierce even the deepest vaults. Artificial intelligence, blockchain analysis, and cross-border data sharing have created a new surveillance state for money. The question is whether UBS can still protect its elite clients the way it once promised. If secrecy collapses, UBS risks becoming just another bank. Large, global, profitable, yes, but stripped of mystique that made it unique. And without mystique, the ultra-rich may find no reason to remain loyal. Then there is the silent threat of public opinion. In the past, banks could weather scandals with payouts and settlements. Today, the court of public opinion is ruthless. One viral leak, one data breach, one insider willing to speak out, could shatter trust built over 150 years. Already, whistleblowers have proven to be UBS's Achilles heel, revealing tax evasion schemes and secret deals. The world is watching now more than ever, and the tolerance for financial giants bending rules has grown thin. Yet despite all these dangers, UBS remains an institution built on adaptability. When secrecy was no longer enough, it pivoted to scale. When scale brought chaos, it pivoted to discipline. When discipline faltered, it returned to its roots: wealth management, stability, and prestige. Like a chameleon, UBS changes colors to survive the jungle of global finance. But survival alone is not enough. Deep down, UBS wants more. It wants dominance. It wants to be not only the world's largest wealth manager, but the world's most indispensable financial institution. A place where billionaires, governments, and corporations all converge because there is simply no alternative. That is the vision UBS carries into the future, to become not just a bank, but a heartbeat of global capital. Still, the shadow of collapse lingers. History shows that when an empire believes itself untouchable, it is most vulnerable. UBS has been here before. Too confident, too large, too reckless. The same story that once nearly destroyed it could return, rewritten for a new age. And if that day comes, the fall will not just be UBS's. It could shake the financial system of the entire world. For UBS, the journey has never been about perfection. It has been about survival. From the ashes of world wars to the secrecy of numbered accounts, from billion-dollar scandals to government bailouts, the bank has always walked a dangerous tightrope, balancing power, profit, and reputation. Each crisis left scars, but also lessons. Each collapse tested its strength, but also proved its resilience. Today, UBS stands as the world's largest wealth manager, trusted by kings, billionaires, corporations, and governments alike. It has weathered storms that would have destroyed lesser institutions. And in doing so, it has earned a place at the very center of global finance. But the story is not over. The same forces that built UBS, ambition, secrecy, risk, and dominance, are still at play. And history has shown that no empire is invincible. Will UBS continue to thrive as the guardian of global wealth, or will it one day collapse under the same weight of greed and power that has haunted it for over a century? That is the unanswered question. One thing, however, is certain. UBS is not just a bank. It is a mirror of our world, a world driven by money, secrecy, and survival. Its story is not just financial history. It is human history. And as the next chapter unfolds, the world will once again be watching. What do you think? Can UBS maintain its throne at the top of global finance? Or is it destined to repeat the mistakes of the past? Share your thoughts in the comments below. And don't forget to subscribe to our channel for more in-depth documentaries like this one.